What's up, guys? Welcome back to another live stream. How are you guys doing today? So, last week we had an issue with my audio. Yeah, it went off, so it has stopped working, and I kind of try to make sure that we will not have any inconveniences during this live stream. So, thank you very much for joining up. Dan Darko, Leslie Williams, Edir BC MRM 5000. Yeah, we are already live. Um, okay, guys, so please drop a comment down below. Let me know what stocks you guys want me to go over. If you have any questions about the markets in general terms, please let me know. In the meantime, I am going to make a summary about what happened today, and I will let you guys know about quadruple witching. This is quadruple witching options expiration week. This is a week when usually weird stuff happens. And as of now, guys, let me pull up here the closing of the indices. There you go. There you go. So we are about to enter, guys, from a seasonality standpoint. Probably we are about to kick off the worst or the worst 2 weeks of the year. But today we had a very, but very solid close from a technical standpoint. I am going to go over the SPY, not a problem. Perfect image detailing. So, yeah, we have some sort of a contradiction over here, guys, because as I said, we had a very good close today. But from a seasonality standpoint, the next 2 weeks, let's say that have a high likelihood of being red weeks. We will see if that actually ends up happening. So what happened today? The Dow Jones went up 0.96%, green day across the board. The Nasdaq went up 0.81%. S&P 500 goes up 0.84%, and the Russell 2000 went up 1.41%. If we check on the sectors of the markets, the 11 sectors closed today in the green, led by real estate, which went up 1.82%. I think that the 10-year Treasury yield closed today in the green, if I am not mistaken. So this is also a contradiction. The 10-year Treasury yield, let me double check on that, guys. TNX, let me see. Yep, it went up 0.92%, and usually in, let's say, regular market conditions or normal market conditions, this sector, real estate, is inversely correlated to yields. That correlation didn't play out today. Utilities went up 1.46%, and the third place was for materials, which went up 1.40%. The worst performing sector today, and I am quoting quote unquote worst, because it actually this sector was also able to pull off a green day. Um, this was healthcare, which went down 0.32%. So nothing to complain about the sectors, the 11 sectors of the markets today. We had a very, very, very positive day in general terms. I'm getting questions about Eli Lilly. Entries for Eli Lilly. Yes, I was taking a look at Lilly today. We have the 5-day moving average at $591. And I think that's my audio there. Okay. And I think that Lilly hit today a brand new 52-week high, or yeah, I mean, not even a 52-week high, a brand new all-time high today, right? What a beast is Eli Lilly, guys. No doubt about it. Okay. So keep in mind, guys, that tomorrow we have, as I said, quadruple witching, which is a day in which this is a day that occurs on a quarterly basis. And tomorrow, long story short, we are going to have a massive amount of options expiring. $3.7 trillion worth of options are going to be expiring tomorrow, guys. Very, very crazy stuff. So this is a day in which we usually see volatility picking up, and we see the market makers, doing some tricks in order to have most of the options that will expire tomorrow, either calls or puts, um, expiring out of the money. So expect a roller coaster ride throughout tomorrow's trading session. I know a bunch of traders, guys, by the way, guys, that do not trade quadruple within days. They simply do not trade that kind of days because we see a lot of volatility, and if the down, okay, if the markets go up and down on multiple occasions on one single trading session, you have a high likelihood of being on the wrong side of the trade many times. So I know some traders, professional traders that make a living out of this profession, that simply don't that they avoid trading quadruple witching, which again occurs 4 times a year. So if you don't trade 4 times a year, or during 4 specific days throughout a year, then you're gonna be fine. You're not missing out on anything important. Okay. Okay. Check this out, guys. I wanted to tell you about the seasonality of September. This is important stuff that you need to keep in mind. However, remember, at 9:30 a.m., when the bell rings, we just need to um, respect the price action. But take a look. This is a seasonality chart of the S&P 500 during September from 1950 up to 2022. Okay? Check this out, guys. From September 17 and until September 30, usually during September, the markets go down. This is very clear, okay? This is a seasonality chart of September, again, from 1950 up to 2022. Does this imply that you guys are going to go all in puts tomorrow that expire later on this month? Absolutely not. Okay, we just need to be aware, or we just need to know the areas of interest before every single trading session kicks off in order to make money out of this business. So you don't need to assume that this is going to be the case this year as it has usually been throughout the last 50 years. And check this out, guys. This chart show you guys. Uh, let me take a screenshot over here, and let's talk a bit about the seasonality of September. So over here in this chart, you guys can see, now this is not what I need, there you go. Okay, this is live television. Okay, check this out. This is a chart of the last 50 Septembers from 1973 up to 2022. And this chart breaks down every single week of September, every one of them since 1973 up to 2022. Okay, so the first 2 weeks of September are not usually very negative, but take a look at these, guys. Post quadruple witching, so during the third week of September, during the last 50 years, we have had 33 red weeks. 33 red weeks after quadruple witching during the last 50 years. So, from a seasonality standpoint, next week is very, but very likely to be a negative week. Okay? This is just an awareness. This is in the awareness category. Again, this doesn't imply that you guys are going to go all in puts tomorrow as soon as the trading session opens. Then the last week of September is usually half and half. Okay? During the last 50 years, we have had we have had 25 positive weeks and 25 negative weeks. So we can make the case again that from a seasonality standpoint, from tomorrow and until next week's Friday, the Bears could be potentially having the ball. However, what happened today during the trading session, the bulls made a ton of progress, guys. They closed the trading session above a fat number, $450. On top of that, they recaptured the, and they also recaptured, sorry, my audio wasn't working over there. They recaptured the 20-day moving average, and they also recaptured the 5-day moving average. And on top of that, the 5-day moving average, which happens to be a moving average that is used in order to determine who is in control of minor time frames, is starting as of now. So from a technical standpoint, we have the bulls once again in total control of the SPY or the S&P 500. So, and again, you know that tomorrow I am going to be letting you guys know the most important areas of interest of the SPY before the trading session opens on my Discord channel. Um, but we have a gap that we can maybe call unfinished business to the upside, $453.50. So I'm thinking that if this gap happens to get filled tomorrow very quickly, let's say during the first hour of the trading session or within the first 2 hours of the trading session, this is a potential spot for a retracement. Again, put this down on a sticky note, $453.50. To the downside, tomorrow maybe we could see some sort of retracement in the SPY. The RSI is a bit elevated, nothing crazy, 69 points. But say that tomorrow we open with a gap lower. Keep a close watch on $447. This is an area that happens to coincide with the 5-day moving average, and this is also a previous support back from August 3rd. So I'm thinking that and again, in regular market conditions, we don't know if tomorrow we are going to have regular market conditions because we have quadruple witching. And again, that's a day that occurs 4 times a year. And that is a day in which, since we have a lot of options expiring, usually volatility picks up. But um, $447 should be a spot in which the bulls could be potentially finding support and maybe bouncing back up. So these are the main levels that I am going to be keeping an eye on tomorrow. And again, seasonality tells us that the markets have a high likelihood of going lower from tomorrow, and let's say for the next few days, at least 1 week. But wow, did the bulls make a lot of progress today? Yes, they did. So, in my opinion, and since I rely for the most part on the technical charts, I am aware of what the seasonality is telling me, but I am going to be relying basically on the technical charts that as of now tell me that maybe higher prices are coming up for the indices. Okay, guys. So let's go over some stocks over here. Do you guys have any questions about the seasonality, about the SPY, about the markets in general terms? Please let me know. You know that I do live stream for the people of my Patreon. I am running my own Patreon, but my Patreon is spoken in Spanish, so I am not pitching you anything. Okay, you guys are perfectly fine on Chris Saint's Discord. But I do live stream throughout the whole training session, guys. I have been streaming today for something like 8 hours since 9 a.m. Eastern Standard Time. And at this time of the day, I'm super tired, guys. So if you notice some mistakes here and there, I apologize for that. Okay, you guys were asking about Eli Lilly. What a beast, guys. Eli Lilly, it went down today 1.21% and it closed the trading session at $591.61. Guys, this is a tough one. So from a technical standpoint, the bulls are in absolute control of the so SPY support may be 447. Yes, if we happen to see some sort of retracement, I think that that's a spot in which the bulls should be finding support at and bouncing back up. Yeah. And to the upside, if we see 453.50 in some sort of a rush, I would expect a retracement from that spot. But again, just keep an eye channel. I think that my audio stopped working over there. Just keep an eye on my Discord channel, and I will be letting you guys know the. Okay, Lily. I was taking a look at this stock today. So we have. Let me zoom in here. So 590 bucks, guys, acted as resistance back on. This was September 11th. And it also acted as support back on September 13th, so yesterday. This is an area of interest. However, guys, the bulls lost today as support the 5-day moving average, which as of now is signaling 595 bucks. So I would be careful here. Um, if I happen to see a Lily holding tomorrow this area 590 bucks, I might be starting a trade over here. And ideally, I would rather seeing the bulls of Lily recapturing this 5-day moving average, which happens to be upward sloping. This is a very good signal from a technical standpoint. So I would have two trades over here. Either the bulls, as I just told you guys, consolidating slightly above 590 bucks, or the bulls recapturing this 5-day moving average and consolidating above it. So consolidating above 595 bucks, in which case we have a potential gap up to the brand new all-time high of Lily at around 601 bucks. So let's say that we start the trade from 591 bucks up to 601 bucks. This would be a 2% profit trade and above the 5-day moving average. So let's say that we start the trade slightly above 595 bucks, 596 bucks, up to the brand new all-time high. This would be a 1% profit trade. So these are the two scenarios that I would be interested in, Lily, in tomorrow's trading session. And remember, guys, whenever you want to buy a dip, you need to buy strength after the dip. I have been telling you this on multiple occasions during my live streams. So when I say that I am expecting support for Lily at 590 bucks, I am not going to be guessing that that area is going to act as a support. What am I going to do? I'm going to wait for buyers to step in at 590 bucks. And if Lily actually bounces back up from 590 bucks, I would be buying strength after the dip. So I would be entering the trade at around 591 bucks because we don't know if certain level or certain area is going to act as a support unless it acts as support and we take the trade after the fact, or let's say that unless we start the position after the fact. Okay, so I don't try to guess supports. I just wait for buyers to do their thing, to do their job. And if a stock that I am interested in bounces back up from an area that I am expecting that stock to find support at, then I start the trade a little bit higher from the level that I was expecting support at. So my trade would be at around, or I would be starting this trade at around 591 bucks, or at around $596 approximately. Sorry, this is a very good looking chart, guys. This is a clear uptrend, upward sloping 200-day moving average, upward sloping 100-day moving average, upward sloping 20-day moving average. We can make the case that Lily is a bit overextended, like uh, too far away from home base. When I say home base, I am talking about this blue line, this 100 BMA or the 200-day moving average. Yeah, the stock is a bit extended, but guys, I have seen so many stocks, that are a bit extended to the upside, keep going higher. And in the case of Lily, we have a very strong momentum with the weight loss optimism. So I think that Lily could be potentially going higher. Let me take a look, guys, at the market structure of Lily. Let me take a look at the demand and the supply of Eli Lily. Let me see. No, come on. Give me the. Oh my God. I should have the market structure of Lily available, right? Yeah, there it is. Okay. Let me see. Eli Lily. Take a look, guys. The demand is rising, and the supply. When I say demand, guys, I am talking about buyers, right? And when the on this chart, guys, what you guys can see on top is the demand or buyers. What you guys can see at the bottom is the supply or sellers. We have a rise in demand and we have a supply that is starting to decrease. So yeah, from a market structure standpoint, the stock of this company is under the control of buyers as well. So I'm thinking that this area of 590 bucks could keep acting as support, and this is definitely going to be on the very top of my watch list in tomorrow's trading session. Okay, Nvda. Let me go ahead and take a look at Nvda. Alrighty. Did you guys trade ARM today? Come on, guys. Speak the truth. You mean to tell me that that none of you took a shot at ARM? I don't know. Maybe the options are not available yet in the case of ARM. But I had a bunch of people, guys, on my community and my Patreon taking a shot at it, and I think that it actually went up a lot after hours. Let me see. What is ARM doing after hours? Let me see ARM. Yeah, it's going higher, guys. Take a look at this. 65 bucks. I did. Maggie did. Ken Griffith said no. Okay. Um. Yeah, this thing went up today 24%. Wow. Wow. Okay, let me take a look at Nvidia. I mean, my advice would be staying away from ARM. So this is an IPO. We don't have um, enough technical previous reference in order to trade the sticker. So I would tell you guys to stay away from this stock. Nvidia went up today 0.21% and it closed the trading session at $455.81. We have seen downwards pressure over Nvidia during the last trading sessions. I'm thinking, guys, this is my opinion. I could be mistaken, but I think that we saw money rotating from Nvidia um, into ARM. So we had a bunch of accumulated gains over here. So I think that a bunch of hedge fund managers were closing winning positions in Nvidia in order to buy shares of ARM. That's what I think happens over here. So that might imply that maybe the most recent downward pressure that we saw over Nvidia is pretty much done, and maybe the stock is heading higher from now and on. So in major time frames, guys, this is a clear uptrend since forever ago. Upward sloping 200 DMA, upward sloping 100 DMA. In minor time frames, yes, the sellers were making progress because we have a downward sloping 5-day moving average, and the bulls are still below this pin line that you guys can see over here, the 20-day moving average. So they are actually, as of now, between the 20-day moving average, which is signaling 465 bucks, and the 5-day moving average, which is signaling $454. So I'm thinking, guys, and again, I use a lot, guys, but a lot, the 5-day moving average. I am going to draw a line over here. If the bulls are able to hold as support tomorrow, this 5-day moving average at around 453 bucks, which by the way, guys, is a previous support back from late August and is also a previous resistance back from early August. I think that the bulls could be off to the races over here, guys. So from $453 ish up to this 20-day moving average, this could be a 3% profit trade. And by the way, this 20-day moving average happens to coincide with a previous resistance back from September 8th. So this could be a potential area of supply rather than demand for NVIDIA. So resistance wise, I am going to be keeping an eye on $466. Support wise, 453 bucks. If that area, if that level happens to act as support, that could be an entry point for a trade on Nvidia, guys. For sure. The fact that the bulls closed today above the 5-day moving average is, from a technical standpoint, encouraging. Let me take a look at the market structure of Nvidia. So demand and supply. Let me see. Nvidia. Let me know if you guys want me to go over other stocks, guys. Take a look. The market structure of Nvidia kind of confirms my conspiracy theory, guys. I just told you that according to my opinion, um, we saw profit taking on Nvidia because we had a bunch of hedge fund managers that were locking in the profit on Nvidia in order to buy ARM shares before the IPO um, started. Let's just put it that way. Before the IPO, okay. Um, and take a look, guys. Again, on top of this chart, you guys can see the demand, buyers. So this blue shaded region, take a look. The demand collapsed. So buyers were running away from Nvidia, and take a look at how the supply was rising. So more sellers than buyers. What happened with Nvidia? We saw a sizable drop or an acceptable drop from 498 bucks, 500 bucks ish, down to 443 bucks. This was an 11% drop. This was pretty much a correction, guys, a technical correction of a bit more than 10%. However, since the ARM IPO is behind us, maybe that money might, or part of that money might be returning into Nvidia. So 453 bucks is going to be definitely be an interesting spot to keep an eye on in the case of Nvidia. If my conspiracy theory happens to be right, happens to be spot on. Okay, can you share the AMD? Absolutely. Okay, AMD Advanced Micro Devices. AMD hasn't been doing anything lately, right, guys? Um, this is not AMD. Sorry about that. Okay, Advanced Micro Devices, AMD. Let me see. So, we still have an upward sloping 200-day moving average, and take a look at how the bulls have been struggling, guys, and a lot, trying to burst above this 100-day moving average. And I'm going to zoom in here. Take a look at how they failed right at the 100-day moving average today. They failed yesterday as well. They also failed back on September 8th. They actually managed to burst above it on September 1st, but they couldn't hold it as support. So they fell below this 100-day moving average, and they also failed at bursting this blue line, this 100-day moving average, on late August. Super critical area for AMD, guys. So it would be a major win for the bulls of AMD. Sorry, I was saying Nvidia. So it would be a major win for the bulls recapturing and consolidate above and up, yeah, above 110 bucks. This would be a major win for the bulls. Let me draw a line over here. Yeah. Again, 100, yeah, let's round it up, 110 bucks, and take a look at this coincidence, guys. So this upward sloping 100-day moving average happens, which happens to signal 110 bucks, happens to coincide with a previous support back from early August, previous support back from mid-July, previous support back from early July, and previous resistance back from late May. Such an important spot for the bulls of AMD. So if the bulls are able to burst above 110 bucks, and if they can consolidate above that level, we have two potential gaps to the upside. The first one, 110 bucks, $112, and the second gap would be $114. So let's say that we start a trade on AMD, consolidating above 110 bucks. So from 110 bucks up to $112, this would represent a 2.20% profit trade, and up to $115. This would represent a 5% profit trade. Nothing to sneeze at. Very important spot for AMD. And on the flip side, and if tomorrow we happen to see a red day and stuff like that, if the bulls aren't able, guys, to burst above 110 bucks, or if they actually burst above it, but they lose it as support, we could be easily, no problem, buying puts of AMD. Such an important spot for advanced micro devices, guys. $110. So keep an eye on it. Let me take a look here at the market structure of advanced micro devices, AMD. Let me see. And we are how long in, guys? 30 minutes in. There you go. Okay. Um, the demand is starting to drop, which is not a good sign. And the demand is the demand is falling, and the supply or sellers is starting to rise, but it is slightly below average. When I say below average, guys, or when I talk about average, when it comes to the supply or sellers, I am talking about this dotted line that you guys can see over here. So, despite the fact that the demand is starting to decrease, it is above the supply, and the supply is below average. So we can make the case that from a market structure standpoint, so from a buyers and sellers standpoint, AMD could be bursting above 110 bucks and maybe filling these two gaps that I just told you about. Definitely a stock to keep an eye on in the upcoming trading sessions. I already went over the SPY. I can make a summary for you quickly over here. I have two very important levels. I told you guys that if this gap up to $453.50 happens to get filled, say tomorrow, in a rush, very quickly, I think that this might be a shot opportunity. And on the flip side, a retracement down to the 5-day moving average, which is signaling as of now 447 bucks, could be a spot from which the bulls could be bouncing back up and finding support for the most part. But remember, I am going to be letting you guys know the most important areas of interest um, tomorrow on my Discord channel, as I usually do. Can you take a look at Netflix? Yes, sir. It got killed today, guys. The CFO dropped the ball. He was at a conference at Bank of America, I think, and he started to say that um, that he said some negative stuff, that the new ad tier is still like far away from its full potential and stuff like that. And the stock started to drop very aggressively. Okay, um, so very concerning over here, or we have a very concerning aspect over here, which is the fact that the bulls couldn't hold today as support this upward sloping 100-day moving average. We have over here also a downward sloping 5-day moving average. So, what could be happening over here, guys? I have two potential scenarios. Okay, if the bulls can recapture and consolidate above this upward sloping 100-day moving average, so slightly above 405 bucks, we have a potential gap up to this downward sloping 5-day moving average at around 423 bucks. And mind you, guys, this is a stock that has an ATR or average true range of something like 10 bucks. So this is a stock that can run up on one single trading session 10 or 15 bucks, no problem. So you have to keep that in mind. So say that the bulls recapture this upward sloping 100-day moving average. They close candles at around 407 bucks, 406 bucks. So if we happen to start a trade near that level and up to, and if we happen to take this trade the way that I am describing it over here, so if we can close this trade at around 424 bucks, this would be a 4% profit trade. Now, nothing to sneeze at. However, what happens if the bulls fail at bursting above this upward sloping 100-day moving average? So if they fail at bursting above 404 bucks, we have two potential gaps to the downside. The first one, we have a previous support that acted as such. This was a few days ago, on August 18, 395 bucks. This is an area in which the bulls of Netflix found support that after having dropped very aggressively after the last earnings report of Netflix. So the price action is telling us that this area is very important. $396 ish. And if this support happens to be broken to the downside, then we have 377 bucks, which happens to be a previous resistance back from January and February as well. I don't work a lot. I don't trust, let's just put it that way, a lot on the relative strength index, the RSI. You guys have heard a bunch of people saying this stock is overbought, this stock is oversold, and stuff like that. The RSI, or the relative strength index, is a very deceiving indicator, guys. I have seen, quote unquote, very oversold stocks keep going lower, 1 million times on multiple occasions. And I have seen, quote unquote, very overbought stocks keep going higher on multiple occasions. However, a lot of people would argue over here that Netflix is very oversold because we can see the RSI sitting at 16 points on the 4-hour chart. So for most people, this is an oversold stock. It meets the criteria of an oversold, of a very oversold stock. So I think that we are going to have a bunch of market participants trying to take a bounce back up trade on Netflix at around 396 bucks, based on based on an oversold condition, quote unquote. I don't work a lot with the RSI. I have it on my chart, so it is some sort of a reference that here and there I take a look at. So I think that Netflix could be bouncing back up at 398 bucks, but that's not a trade that I would be willing to participate in, because, and as I just told you guys, I like to take trades to the upside when I have confirmation that buyers are in control. So in my opinion, um, I would rather taking the first trade that I told you guys about, buyers showing some strength, Netflix bursting above 406 bucks, closing candles above that level, and that would be a trade in which I would be more interested in, relative than guessing the bottom at 396 bucks. And again, 396 bucks is the last line of defense for the bulls. If this support happens to be broken to the downside, oh boy, what about 377 bucks? This could be a possible scenario for good old Netflix. Let me take a look at the supply and the demand of Netflix over here. So what is the supply and the demand looking like? Buyers and sellers. Let me take a sip of seven. Is this 7 Up? Yeah, 7 Up. You are on puts, swinging till tomorrow. So if I were you, brother, I would be locking in the profit at 397 bucks, 396. I think that with the RSI being that low, you're going to have a bunch of traders um, taking a shot at a bounce back up trade based on an oversold condition. Yeah, that would be my price target if I were you, obviously. But let me take a look at the market structure. Take a look, guys. The demand is collapsing, but the supply is also decreasing and below average. So 396 is a potential spot for a bounce. Yep, yep, I would say so. Not a problem, bro. Anytime. Gu Palak Krishnan, a very good job on Netflix, bro. With that short, very good job. Absolutely. Yep. Okay, guys, we are how long in? Let me know if you want me to go over any other stock. 38 minutes in. So I have tried um, to carry out a very detailed technical analysis. So if you have any other requests, we already went over the SPY, Netflix, um, Palantir, PLL. Is that a stock, or did you mean Palantir, the Messi of AI, or PLL? Let me see. I don't know. I don't know the ticker. Piedmont Lithium. Is this a stock that you want me to go over? Major downtrend, but the buyers are making some progress over here. Is it Ginvalds? Piedmont. There you go. Okay, awesome. Goes up today 2% and closed the trading session at $45.41. Um, this is a major downtrend. Be careful here. So buyers have been making some progress, but this is still a major downtrend below the 200-day moving average. The 100-day moving average happens to be downward sloping. But take a look. the bulls recaptured both the 20-day moving average and the 5-day moving average. So we can make the case that buyers have started to step in over here. We have a next resistance or potential area of resistance for Pittman coming up at, let me zoom in here, guys. Yeah, we have 40, this is 40, $45. Let me see. So yeah, the bulls failed today at a spot at which they failed on two occasions recently. So $46.40, they failed at this area back on September 5th, which happens to be my birthday.